Have you ever asked your mutual fund manager, stockbroker, or even your banker to give you a written guarantee on the returns from your RSP or investment portfolio? They would tell you there's no place where you can grow your money safely and secure with no risk of loss. Over the last decade, many people saw their accounts lose almost 50% of their value. Did you know that during the last financial crisis in 2022, we encountered several people who had RSPs and mutual funds that practically evaporated in value, most of which have still not returned to break even? Nelson Nash, one of my mentors, he said, when people buy stocks or mutual funds, they're buying opinions, and opinions change. Our clients tell us they're sick and tired of taking it on the chin in the markets. More people are discovering the banker secrets through implementing the infinite banking system and taking financial control over their lives by firing their banker. Imagine a guaranteed paycheck for life. The infinite banking system comes with contractual guarantees along with security provided by a track record of stable returns since 1848. Returns that survived even the Great Depression. When you implement the fundamentals of becoming your own banker, it provides a place where wealth can reside without any risk of loss of your money. We call this creating a guaranteed paycheck for life. In fact, it's one of the best parts of the infinite banking system. The system creates an income stream to provide you with a guaranteed cash flow at any age for life. There are a few things in life that are certain, and one of them is the inevitable flow of money in and out of our lives. Did you know that 34.5 cents of every dollar that the average Canadian family earns is spent on interest for debt payments? Money that should be laying the foundations for your happy and profitable retirement is actually flowing away from you forever. Blame whoever you want, but your financing needs are the true silent killers of your future hopes and dreams. For years, you've been planning for what will happen when you retire or pass away, when you should be focused on what is happening to your money right now. You have to get yourself on the right side of debt. Let's look at the typical flow of interest and money. For a car loan, about 20 to 25% of every payment goes towards interest. With mortgage financing, up to 90% of your early payments go towards interest, and high interest credit card debt only magnifies the issue. Then there are taxes to pay, not to mention 10% of our income that you need to set aside for retirement or day-to-day savings. After all of this, there's not much remaining for everyday living. A lot of people think that the stock market is the solution, which is why a large percentage of the so-called investors continue to chase market returns as they search for the next hot tip or investment. But chasing returns is a real lesson in frustration. You may have a good year earning 9% or more on your investments, but still feel like you're losing ground. The truth is, you're losing ground because your focus is on the wrong side of the banking equation. You're focused on chasing single-digit investment returns while losing 34.5% of every dollar to interest. You can recoup all of the interest and principal that is presently flowing out of your life and get that money working for your own financing system. What would your finances look like if you were receiving 34.5 cents of your own income from your own loans instead of paying out over a third of your hard-earned income to someone else? This means you could add an additional $400,000 to $600,000 to your retirement savings just by changing the way you finance your purchases. The insurance companies that we work with have been using tax-exempt dividend-paying whole life policies since 1847 and have been crediting policy owners with dividends every single year without exception. What amount of money do you need to lose in order to change what you're currently doing? Who do you think has the better data? The stock analysts or insurance actuaries? The actuaries at the insurance companies are basing this whole process, this whole insurance engine, on real data. The life insurance companies have completed paramedicals on hundreds of thousands of policy owners. They've tested a lot of people's blood and urine, examined medical histories, and much more. An actuary can forecast with a scary degree of accuracy how many people in any age category, gender, smoking status will die in any given year. Can you imagine how much better you'd sleep at night knowing that you don't have to wake up in the morning with the possibility that your money has all but disappeared? While you're here, take a moment and click the thumbs up button. It really helps us out. Let me know what you'd like me to cover in upcoming videos. And if you haven't already, go ahead and subscribe. We'd love to keep you posted.